Hi friends, Simit here from InformedTrades.com. Today's Wednesday, August 6th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as part of helping traders learn. You can learn from my successes, learn from my mistakes. I am trading on a live account here. These trades are verified by myfxbook.com. You can see my whole verified trade history going back 9 years over on my blog over on Informed Trades, where we also have a lot of educational materials. So if what I'm presenting is unfamiliar to you, check out the learning section on Informed Trades. Share your knowledge, ask questions. We can all learn together. Let's get started with a look at the charts. First, we'll start with a look at gold. As I've mentioned in many of these series, I have a long-term position in gold that I'll be holding for years, presumably, or I anticipate holding for years. I expect gold to go above or beyond its 2011 highs, the highs that I saw in September 2011. I think that was around 1920 was the price per ounce in dollars. Right now, big update yesterday. We are currently just above 1300, right at 1301. I think the support we're seeing is at 1280. Right, we see this level tested a few times here, but this support level is pretty strong and goes back to at least April of 2014, and you might even argue that it was formerly a resistance level in January of 2014. So 1280, pretty significant level. Market bounced off it. Today's big update, it closed above the 50, or looks like, not yet, but so far we're above the 50 simple moving average. If we can maintain that, if we can stay above 1293, that could be the new support level. Resistance we might find at 200 exponential average of 1310. So 1290 to 1310 looks like the near term support and resistance. Of course, longer term, I'm looking for a much higher gain, and we're still in this rectangle, this range that we've been in. Seems like almost the majority of the year, or at least since March. So that's the quick story on gold. Big up day, up over 1% today. Bitcoin down, and as I mentioned, I think, well, we did find support at 567. Looks like we're about to come back into that. Folks may be interested in buying. If you're interested in getting in at Bitcoin, 567 might be a level to buy at. Personally, I'd want to see price close above the 50 simple moving average, 607. Now, price could close above it. Either the 50 simple moving average continues declining and we form a base and price rallies above it. But I'd really like to see price move above it a bit more. I think also we may get some formidable resistance at 633 that could bring more bears out. However, you could make a case that 567 is well established, especially in the short term, to buy as a level to buy there. I got long a little after 522, right at here, and I'm holding it for a 10 times gain. I'm willing to risk. I only put on a small position, so I'm willing to risk it all. Treating it really like a small cap stock. So in terms of the near term, 567 support. Watch 607 and especially 633 as resistance levels on Bitcoin. Okay, now on to the Forex trading. Yesterday was, unfortunately, a rather rough day for my Forex account. Past July and so far early August, first week of August, have been a bit rough. I went from being in the positive, in the money, now I'm slightly down. I am down about 0.35%, so almost at break even in my account for the year, slightly down. Of course, our goal is to be up as much as we can, so that's not not the desired position to be in 7 months into the year, but at least not too far from break even. And all it takes is a few good trades when you're a trend follower to get things going well. So in terms of the trades, let's sort of recap. Well, let's go down the list. Also, again, this is the one trade that is, let me get to that. Okay, so this trade is still in the money, still going well. We might be finding support here at 95.25. Let's see. It looks like we have a little bit of a hammer candle off that. It used to be a resistance level. It could now be a support level. My stop, I entered at 94.71. My stop was, I think, around 94.25, 21, somewhere around there. I moved it to 94.71, so my stop is now a break even. If price comes down to 94.71, I'll be out of the position entirely. I won't lose any money on that. And I did take half profit up here at 96. So this trade has worked out partially for me. Of course, with my half position that's still on, I do want to see to go 96.45. That's my target profit. You see this resistance level established here, early July, July 1st. and especially even more clearly here, April 4th. So that's Aussie yen. It gets a little more painful as we go down the list. Euro, Kiwi. This just barely hit my stop, you can see here. So maybe the fourth time this year that's happened. Now, it may still, overall, though, this trade was, especially the candle we saw the day before, yesterday, not the kind of candlestick price action I'd really want to see. And even today, it shouldn't have gotten. The trade is really, I was expecting more of a bearish checkmate here on August 1st. So what that means is I don't think the high, I wasn't expecting this high to be breached. I put my stop a little bit above that, but really a clear breach of this high shows that my trade idea was incorrect. So time to get stopped out. Keep the losses, small there. That's disappointing. New Zealand dollar, though, that's hurt me quite a bit. Not quite a bit. I mean, I've lost 1% of profits. Although if I hadn't lost that percent, I'd be in the money. So I guess it's slightly painful in that regard. But that's part of the trading experience. In terms of what I did incorrectly with this trade, it seems like a downtrend. I traded the pullback there. I think it was, this trade is probably, I think I can write this off as just, cost of doing business. You're not going to be 100%. I think the logic here was sound. There have definitely been other trades earlier in the year where that hasn't been the case, where I've made psychological errors. I was a little too rushing a little too much. Didn't get the confirmation of other currency pairs that I wanted. Euro Kiwi, this trade I think was okay. It was just didn't work out. The logic I think was acceptable though. Euro Canada. Okay, now this position is still on, and there's still hope for this one. We're basically at break even. You can see right here. I entered at this black line here. My stop 46.17. My stop is at 46.97. Target profit all the way down here 43.17. So far, it's slightly out of the money, almost basically at break even. So it's acceptable. The range we're seeing here could very well be a distribution. Basically, we have a clear downtrend here, especially if you look at the high from March 19th. Market has clearly been trending down. We did have a pullback. It was a 50% pullback from this swing high to this swing low. 50% is point C here. If we project that going forward, we might get a target of 43.17 if we expect the downtrend to continue. Another way of looking at this, let me get a parallel channel going. There. So let me actually make this a little dark. Oh. And we'll make it yellow. There we go. Keep it solid. Okay. So there you go. You can sort of get an idea. We're at the top of the channel here. We're near that trend line, the downward sloping trend line. We may head, if you expect this channel to continue, you could target the bottom of the channel, point D. So there may be, depending on where we are, how price and time relate, that'll give you an idea of where to target. We saw a 57% pullback. If we project that going forward, we can also get a target of 43.17. So you can see how that sort of potentially matches up with the bottom of the channel or in the same vicinity. But more importantly, we've had a pullback in a downtrend. These narrow candles here suggest distribution pattern. So perhaps sellers are slowly unwinding and market will get ready to head south. So this position, so far so good. Let's see how it pairs out. No need to make any adjustments here. Dollar Singapore. This was not. This is another trade that hurt me. Stopped out here. If we look at the logic, downtrend clearly. Price is below the 50 simple moving average, which in turn is below the 200 exponential moving average. Had a pullback that was more than 50% from this swing high, point A, to this swing low, point B. This was also a resistance level. That 50% pullback coincided with a resistance level here, this black line, which was established here May 8th. Here again, April 9th. as a resistance level here, July 2nd. And we saw some resistance here. We saw a couple down candles, so I thought that could be a good opportunity to enter. But last 2 days, especially today, big up candle, strong up candle, and it hit my stop. So this idea was proven wrong. I think the logic was legitimate. It just didn't work out my way. That happens, but of course, if you keep your losses small, if you know you're riding the right trends and your reward risk is in your favor, it's larger. You stand to gain more than you're risking. You don't even need to win on all your trades or even half your trades. It can still work out well for you. So that's about it for the trades I have on today. Not putting on any new orders. I looked at the market, didn't really see any opportunities that I liked that I thought were compelling. Still waiting for. I'm seeing a lot of trends that look like they could be ready to reverse. However, I don't want to enter counter trend strategies at this time. So let's see if those trends do. If we do get a counter trend, if we do get that pullback, then there'll be opportunities to enter. But for now, 2 days in a row, no new trades. That's fine. I still have 2 existing positions: Euro Canada and Aussie Yen. So we'll just see how those positions are faring and pan out. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.